Welcome to the Deep Dive, where we plunge right into complex topics, pulling out the insights you really need to be well-informed. Today, we're focusing on a company that's, well, quite literally building the world around us. And they've just announced some figures that are, frankly, pretty eye-popping. We are talking about Sobha Ltd.
That's right.
Their Q1 FY26 performance details just dropped, fresh off the press, from July 25, 2025. We've got the latest press releases, investor presentations, board meeting outcomes. Quite a bit to go through. Expert, what's our mission today as we dig into this stack?
Yeah, good question. Our mission really is to cut through all the noise. We want to give you the absolute core understanding of what's going on with this major player in Indian real estate. We're here to distill, the most important nuggets of knowledge and insight, make you well-informed, but without the information overload.
Right. And when I say eye-popping numbers, I really mean record-shattering stuff. Sobha Ltd's real estate sales value has, for the very first time, crossed that 2,000 crore milestone. It hit an astounding euro 0.79 billion.
Incredible.
And their profit after tax, the PAT, basically what shareholders get after everything, that's up 123% year over year to euro 0.13 billion.
Wow.
And revenue, also strong, a healthy 35% year over year growth, hitting 9.01 billion. These aren't just figures floating around, they feel like signals. Expert, how significant is it really for a giant like Sobha to hit these kinds of milestones in just one quarter?
That's a fantastic question, and it really does set the stage. Hitting that euro 2,000 crore sales value mark for the first time, it's not just a number, it indicates some powerful acceleration. And what's truly fascinating, I think, is how these impressive financial results are directly fueled by their strong operational metrics, the actual work on the ground. In Q1 FY26, Sobha sold 1.44 million square feet of new area. That's a 23% jump year over year.
Okay.
So it's not just about selling more. It seems like it's about selling strategically. And the average price realization also stood strong, 14,395 per square foot, which indicates not just volume, but also their ability to command, premium prices, especially in some key competitive markets.
So value is definitely part of the story, not just volume.
Got it. And what about the actual cash coming in the door? Because in real estate, cash flow is king, right?
Absolutely. It's critical. And on that front, their total operational cash inflows reached 17.78 billion. That's a solid 14.9% year-over-year increase. And maybe more critically, their real estate collections hit a historic high of 15.99 billion.
Historic high.
Yeah. So it means they're not just, booking sales on paper, they're actually converting those sales into cash, which is vital for funding ongoing projects, keeping things moving, maintaining financial health. It really speaks volumes about their efficiency in collecting payments.
That strong cash flow certainly paints a picture of operational muscle. Definitely. But the real story here, it seems, isn't just selling more homes overall. It's where and how they're strategically expanding their footprint. The managing director, Mr. Jagadish Nangani, he specifically highlighted robust demand across cities and, crucially, the successful launch of our first project in Greater Noida.
Right, the NCR expansion. Exactly. That project, Sobha Aram, seems pivotal. It's, 3.44 acres, over 700,000 square feet saleable area, 2 towers, 420 homes, and they mentioned 74% open space. That's quite a bit. Now, the sources say this one project contributed a massive 8,339 million to sales. How significant is that? What does that tell us about Sobha's move into Greater Noida?
Oh, it's colossal. That contribution from just one new launch is huge. I mean, to put it in perspective, that's nearly 40% of their total real estate sales value for the entire quarter.
Wow, 40%.
Yeah, pretty much. Coming from effectively one project in a brand new market for them, it instantly anchors Greater Noida as, a major growth engine. It demonstrates both strong market demand there and Sobha's brand appeal, clearly. It's really a testament to their ability to identify and capitalize on new opportunities pretty quickly. And it expands their operating locations now to 12 cities.
12 cities now. Okay.
Yeah.
And they didn't stop there, did they? They also launched the remaining 4 towers of Marina One down in Kochi.
That's right. The big development in Kerala.
Yeah, part of Kerala's largest residential development, apparently. Adds over 920,000 square feet, 362 homes. And they mentioned a huge 48,000 square foot clubhouse. Yes. Sounds impressive. So looking at the overall regional performance, the NCR region, National Capital Region, that's Gurgaon and Greater Noida, it surged, contributing a dominant 57.1% of sales.
57%.
Yeah. Bangalore, their traditional stronghold, still key at 29.0%, and Kerala's contribution jumped up to 10.1%. That's a 63.4% improvement just from the previous quarter, Q4 FY25. And notably, Gurgaon's sales nearly doubled from Q4. Expert, this regional shift, particularly that NCR surge, it seems quite dramatic. Is this something you'd expect to be sustainable, or is it maybe heavily influenced by these big recent launches?
That's a critical question. And while new launches undeniably give you a significant bump, the sheer scale of the NCR contribution suggests there might be a deeper underlying demand there. It's likely a combination, perhaps pent-up demand, maybe attractive pricing points, and Sobha's premium brand just resonating strongly in those markets. If they can keep replicating these successful launches, keep the sales momentum going, yeah, it absolutely could be a sustainable trend. It would certainly diversify their revenue streams beyond Bangalore.
Fascinating stuff. And looking at the price breakdown, 38% of sales came from homes in the 2-3 crore range. That includes projects like Sobha Aurum in Greater Noida and Sobha Neopolis in Bangalore.
Right, the mid to upper segment.
Yeah. Then the 1-2 crore range was 23%, and homes from 3-5 crore contributed about 20%, including properties like that Marina One in Kochi.
So a good spread across different price points?
Yeah, seems like it. And this quarter also saw them complete 1.07 million square feet. Specific projects like Sobha Royal Pavilion in Bangalore and several towers in Sobha City, Gurgaon were finished. So, okay, we've seen impressive sales, smart geographical moves, robust cash flow. But underpinning all this has to be their financial health, right? Expert, what really stands out when we look at their balance sheet?
Well, you think about real estate, and it's almost always a very debt-heavy industry. Companies are constantly borrowing huge sums for land, for construction. So to see Sobha achieve a negative net debt position, that essentially means they have more cash than debt, to the tune of negative 6.87 billion.
Negative. More cash than debt.
Exactly. Which results in a net debt-to-equity ratio of negative 0.15. That is, well, it's pretty much a game changer in this sector. It gives them unparalleled financial flexibility. They can potentially acquire prime land when opportunities arise without relying on costly financing, maybe outmaneuver competitors, speed up project launches. It's a huge strategic advantage in such a capital-hungry sector. Signals immense financial strength, really prudent management.
That negative net debt figure is genuinely remarkable for a real estate company. Suggests they're in a very strong position financially. But looking at the profit and loss side, total revenue for the quarter was 9.01 billion. EBITDA came in at 0.73 billion, that's an 8.1% margin, and PAT at 20.136 billion, or 1.5% margin. Now, the company did note that EBITDA and PAT were impacted by a lower revenue recognition on account of delay in issuance of OCs in Bangalore projects. Expert, can you quickly unpack that? What are OCs, and why do delays impact the revenue recognition even when sales and cash collections are so strong?
Of course, yeah. OCs are occupancy certificates. Think of them as the official green light. It says a building is safe, it's completed as per plan, and it's ready for people to actually move in. Now, for real estate companies, accounting rules often mean the full revenue from a project is formally recognized on their books only after these OCs are issued and the property is handed over. So even if they've sold, all the units, collected a lot of cash up front, if there are bureaucratic delays or other issues in getting those final certificates, well, it pushes the formal revenue recognition into future quarters. This explains why, despite those incredible sales figures and cash collections we talked about, their reported profit margins for this specific quarter might seem a bit thinner.
Right.
But, and this is crucial, they also noted the substantial balance revenue yet to be recognized from sales done till June 30th, 2025, was 172.45 billion.
Wow, that's a lot of deferred revenue.
Exactly. That revenue isn't lost, it's just deferred, which points to very, very strong future earnings visibility down the road.
That makes a lot more sense. So it's more of a timing issue with the paperwork rather than a fundamental problem with profitability itself.
Precisely.
Okay. So what else are they doing to sort of fortify their foundation for the longer term?
Well, if we connect this to the bigger picture, beyond just the core real estate business, their focus on strengthening that balance sheet and also investing in operational efficiency is quite clear. They've approved procuring renewable energy through what they call a captive consumption route.
Captive consumption, meaning for their own use.
Exactly. They're taking a 26% equity stake in a company called Altilium Solar One Private Limited, which is set up as a special purpose vehicle, an SPV, with another firm, Altilium Energy Private Limited. Think of an SPV as just a dedicated, separate company created for this one specific project. It helps Sobha, ring-fence the risks and the finances of this solar plant, keeps it separate from their main real estate operations. Yeah, and this strategic energy move.
Yeah.
It isn't just about, say, ticking a sustainability box. So that's part of it. It's really about long-term cost savings, reducing their operational expenses, future-proofing their energy supply, especially in what's becoming a pretty volatile energy market. It's a smart, mature play. And we probably shouldn't overlook their commercial portfolio either. It generated a net operating income of $143 million in Q1. That's from a total leasable area of nearly 1.3 million square feet.
Okay.
It's smaller than the residential side, of course, but it provides a consistent, recurring revenue stream, adds a bit of stability.
So diversified income, a rock-solid balance sheet, investing in efficiency, it paints a really robust picture.
Yeah.
Which leads us to wonder, what's the roadmap ahead? Where are they literally building their future?
Well, their future trajectory is quite literally built on land. Sobha holds a substantial land bank, 417 acres.
117 acres.
Yeah. With the development potential they estimate at 41.91 million square feet of saleable area. That's huge potential. And the key regions for this land: Bangalore holds the lion's share at 49%, Tamil Nadu has 19%, and Gurgaon has 18%. Imagine having that much prime real estate just sitting in your back pocket, especially with that negative net debt position we talked about. It's like a future gold mine for a developer.
Having that kind of land bank, especially unencumbered by debt, must give them a massive competitive edge, wouldn't you say? In terms of future projects, market flexibility.
Oh, absolutely. It means they don't have to rush into land deals. They don't have to compete fiercely in overheated markets if the timing isn't right. They have a luxury of, patience and strategic timing. And complementing that land bank is their inventory visibility. They have a total of 29.93 million square feet across completed, ongoing, and forthcoming projects, which represents a massive potential sales value of $434.54 billion. That's a very, very clear roadmap for future sales.
That's incredible visibility.
It is. And they also plan to launch between 6 to 8 million square feet of those forthcoming projects just in the rest of this financial year, FY26. So they're actively feeding that pipeline. This extensive pipeline translates into projected cash flow as well. They estimate a marginal cash flow of over $110.90 billion from completed and ongoing projects, plus another euro 70.84 billion from the forthcoming ones. So for you listening today, what does this mean? It means a clear path for future growth, a really strong pipeline. It indicates stability and pretty impressive future earning potential.
That is a truly impressive pipeline, a real strategic advantage. And it's interesting, isn't it, just as we see this incredible financial strength and operational success.
Yeah.
We also have these legal challenges kind of brewing in the background. It feels like two sides of the same coin in such a dynamic industry like real estate. Expert, how should we approach these disclosures? They're important context.
You've hit on a really important point there. These aren't just isolated incidents, unfortunately. They're often a common reality for any large developer trying to navigate India's, let's face it, complex legal and regulatory environment. What's crucial for our understanding, I think, is how the company's responding to each specific issue and what it might signal about the broader operating landscape they're working in. And it's really important to reiterate here, we are simply reporting the content from the sources provided. We're not endorsing any particular viewpoint, just making sure you understand the disclosures Sobha itself has made.
Understood. Okay, so let's start with the Enforcement Directorate, the ED investigation. This involves a provisional attachment of land parcels valued at 2016.05 million. It relates to a Gurugram joint development agreement. The allegations, according to the sources we have, involve irregularities in the manner of allotment and pricing. Now, the company's stance is that it believes these transactions were, and I quote, carried out in accordance with all the applicable laws. They've appealed the order, but they do acknowledge the outcome is, quote, presently uncertain. So that's one ongoing issue.
Right. Then we have a customer contract termination. A customer is demanding a significant sum, $2,956.13 million, in compensation. This is after they terminated a project development contract with a Sobha subsidiary, Sobha Assets Private Limited, or SAPL. Now, SAPL, the subsidiary, views that termination as illegal. They've filed an arbitration petition to challenge it. So another dispute, significant money involved, and it's heading into the legal process.
Okay. There's also a situation regarding a fire NOC no objection certificate and a subsequent criminal case. Apparently, the company itself identified defective fire NOCs for one of its projects.
Oh, interesting. They found it themselves.
Yeah. Which then led the local municipal body to revoke the project's sanction plan and the occupancy certificate. So, serious implications there. Subsequently, a unit holder in that project filed a criminal case against the company and its employees. However, the Karnataka High Court has issued an interim stay on both the revocation order and the criminal case. The company maintains the allegations are baseless, false, and not sustainable. But again, it's an ongoing legal matter.
Got it. And finally, there are the Income Tax Department demands. These stem from a search conducted back in March 2023. The demand orders now total about $672 million after some rectification. They relate mostly to disallowances of certain expenses and some additions of income. As with the other cases, the company has filed appeals and, quote, believes that the company can succeed in the appeals filed. So, yeah, these ongoing legal and regulatory matters. Even with the company expressing confidence in their appeals, they certainly introduce an element of risk, don't they? They require diligent monitoring in any kind of investment scenario or market analysis. They really remind us that even the most financially successful companies operate within a very complex, sometimes challenging legal framework.
Absolutely.
Now, on a more positive note, amidst all this, the board did approve a dividend of $3 per equity share. That was then approved by shareholders on July 24th, 2025.
Okay, a return to shareholders.
Exactly. And just for continuity, their cost accountants, Ms. Gudi Srinivasarao & Co., have been reappointed for the next financial year, FY25-26.
Okay, so pulling this all together, what does this deep dive into Sobha's Q1 FY26 performance truly signify for you, the listener?
We've seen a quarter marked by really astounding financial and operational records. We've seen strategic expansion into new territories, a seriously fortified balance sheet with that negative net debt. Yet, we've also uncovered the series of ongoing legal and regulatory challenges, which definitely cast a different kind of light on the operating environment they're in.
It's a real mix, isn't it?
It really is. So is Sobha's performance a testament to the sheer resilience and maybe the growth potential of India's real estate market, showing strong performance even while navigating a complex regulatory landscape? Or perhaps does it also highlight that even with stellar financial results and these aggressive strategic plays, the true strength of the company lies just as much in its ability to navigate and mitigate those unforeseen legal and operational headwinds as much as it does in its sales figures?
That's the key question, I think. It's certainly a fascinating interplay. Ambitious growth on one hand, robust risk management needed on the other, all within a really dynamic market. Definitely something worth pondering.